Welcome back, YouTube. In today's video, we're going to talk about the optical illusions that shorts create in Dogecoin and other assets that they do not like and that they do not want to simply increase in price. This is a game that's often played when they simply want to destroy something or keep control of it. And if you're not careful, and if you're just simply looking at price action or reading articles online, they will actually manipulate you, and the stigma around an asset to thinking that this is natural price action or that this is actually supply and demand that's dictating the price of the asset you're looking at. When Elon responded to my comment, I never made another comment on the post, but I did look at a lot of the comments because, obviously there were thousands of them. But I wanted to just kind of see what were the things that were going to be mentioned as far as pertaining to Dogecoin. And the biggest thing was, oh, well, look at the price. Look at the price of the decline since last year. Look at the price. Why is the price stagnant? And I think that the price stagnation is a really important topic to tackle here, because if you don't have an understanding of the market, it will just look like that. And you'll think, oh, okay, well, this is probably the conclusion that people are coming to, saying that the coin is dead. If you follow my channel, I've done a ton of videos on shorts, what they are, how they work, even the price action. The short chart that you're looking at right now is Dogecoin's short chart, because you'll see that shorts actually raised slightly above the 200-day moving average. And we've been here trending sideways at the 200-day moving average for over a week. Now, if you don't know what shorts are or how they work, this will have no significance to you. You'll just say, oh, look at the coin. It's been 8 cents for a week now. It's broken support. It's dead. What's the issue here? But if you take a deeper look at what shorts are and what they're actually doing, if you take a look and you evaluate the price action, you'll see that the reason that they're holding this line here is because that's enough to combat the buy orders that are coming in. And when they need a little more, they want to take it down a little more, you'll see a spike up, which is what we're seeing now. We're seeing a spike up to kind of keep the price in check for where they want it at the time being. So we know that a short creates an automatic sell order in the market at that specific time. They don't have to buy the asset until later when they get their proper spread. We also know that if you are shorting an asset, you make a lot more money by letting that asset run and looking for a point of consolation, a point of divergence, confirmation of reversal, whatever you want to call it. You look for that. And at that point, you attack the asset and start shorting it down. You open up your profit margin infinitely when you short this way. And that's typically how shorts are done. It's only smart. But when we see the movement like we see with Dogecoin, is pretty much any positive catalyst, let's just start shorting right away. Or any type of negative catalyst, let's jump on that, try and capitalize and get some additional shorts in. And then when the Dogecoin gets cheap enough and you see the community actively buying Dogecoin, you say, okay, let's short it. You short it so much that you are now at the 200-day moving average, and now you can't pull out because Dogecoin will rally. So now you are just simply paying interest, because when you open a short, typically that interest is due daily. So for them, it's worth it to not return those assets and simply hold the line here at the 200-day moving average. So this lets me know that they have a plan to either further dip the coin or further open up the gap. Both of those involve a downward movement. They've been here at the 200-day moving average for over a week. This is much different from a put. This is not like you're simply, making a wager here and saying, hey, I believe that this asset is going to go down. If it doesn't, you keep my premium. No, this is why I believe short should be legal, because you're actually taking the bet and you're taking it a step further and saying, hey, let's make this bet real by simply creating a sell order in the market. Even though I want it to go down, that's how I'm going to make my money. But now I'm actually going to use my bet and create a sell order to further push it down. So now not only am I betting that it's going to go down, I'm actually helping it go down so that I can make a profit. And this is what opens up the market to so much manipulation, because if they, let's say right now, if they got into a tight spot and they say, hey, we need Dogecoin to go down, they can always simply just say, hey, look, we're going to short even more, because that short is the sell order goes in at the time that they actually shorted it. So you can have shorts at many different positions in the market. And this opens up the window to even further manipulation, because they can have a short at 8 cents, they can have a short at 6 cents, they can have a short at 10 cents, and they can simply use those different cash out points to fund even further shorting. So this is simply a way to kind of just stair step down an asset. And this is what we've seen, where we've seen the attempt several times over the last year, but we've seen that now that retail has caught on, we've seen a lot of pushback. And I believe this is what we're watching here with Dogecoin. So what's this optical illusion I'm speaking of? Well, the optical illusion is if you look at the actual price of an asset, you'll say, okay, well, this is determined by supply and demand. But then you'll say, okay, well, if the people are buying, if we look at the pools of liquidity and we see that people are actually buying and we see where the support is and where the buy orders are fulfilling at, we'll see that, okay, well, people are actually buying this asset. And if that's the case, why is it that ever since Dogecoin's been below 10 cents, we've seen shorts at pretty much a 200-day moving average? Wouldn't the consumers that were selling off, wouldn't that be simply enough to drive the price of the coin down? And when you think about it, if the shorts are if we need a 200-day moving average on shorts, just how much buying pressure do we actually have? Because Dogecoin is not going down until we have that extensive selling by these sell orders that are coming in. So because you only have something that's stagnant when you have an equal amount of pressure pushing against something as it's pushing down. This is stagnation, when you have the same amount of force meeting up with each other. So you can say, okay, well, this is like a battle here because the sell orders are evening out with the buy orders. That's how you get a stagnation. It does not necessarily mean that, oh, well, no one's buying the coin. So then you have to look at it and say, okay, well, where are the sell orders coming from? And then you look at this and you'll say, okay, well, these sell orders are not the community. And then, of course, you can take it a step further and say, okay, well, then what's the agenda? I made a bunch of tweets and even videos. We've seen what happens with Dogecoin the second these shorts let up. Dogecoin pops back up. So this is not the actual true price of Dogecoin. This is not even like, we're not even talking about price action. We're talking about where Dogecoin has consolidated at thus far is not the actual price of Dogecoin based off of supply and demand. Shorts are nothing more than a supply and demand manipulation. The reason I say it's an optical illusion is because what we're seeing here basically is not real. We're seeing a manipulation in price because they're counteracting with how much buying pressure that is coming in. They're counteracting it with sell orders. And then we're saying that, okay, well, where are these sell orders coming from? Well, they're coming from a promise to buy an asset later. You created a sell order out of thin air just because you simply said, hey, I wanted to short an asset and you just paid a fee, then boom, automatically Dogecoin was sold. Whose Dogecoin was sold? You're selling the Dogecoin that is being held in your brokers, like the ones that I purchased from you? How can my Dogecoin that contributed to positive buying pressure that should technically be neutral in the coin right now, how can that be used against me? So basically, you're leveraging and creating a temporary Dogecoin to counteract my positive buying pressure, getting a breakdown in the coin by a coin that technically doesn't even exist. This is all a game with smoke and mirrors. And this is one of the reasons I've been telling people to move your Dogecoin. This is why I've been writing articles on Reddit, on Twitter, and I know the word has got out and you guys are doing a tremendous job at sharing it, but this is the reason behind it. This is all a bunch of smoky mirrors, and this is why we have to tackle this now. Otherwise, we're going to see what we see in the stock market, which is literally its own beast that's like brewing over there. And we're going to see that literally trickle over into the crypto market if we're not careful. And we have to understand, they're not doing anything new compared to what they've done already in previous markets. This is what they know how to do. They make 99% of their money through leverage. When we're buying and selling coins or transferring coins and stuff like that, they get little fees and kickbacks off of all of that. You know, even the coins, and you say, oh, well, show your proof of assets. How many coins do you have? Or is it the same few billion coins going back and forth? Because when you sell a coin, technically there's a buyer on the other side of that. It's not necessarily the exchange or so that's buying your coin. So even when you're doing a transaction, these exchanges, these funds and stuff like that, these market makers, typically they're just the middleman, but they're going to get a fee both ways on this execution of this sale. And then you have to ask yourself, what's the point, right? What's the reason that they're simply putting this much effort in to kind of BS you to move or for you to sell the coin or simply get out of the coin? What's the alternative here? And you have to understand that this is an effort to steer you away from this asset. This is not this is not about money, because again, we know that how they would actually short this was about money. This is an effort to actually steer you away from this asset. All markets have their favorite, all institutions have their favorite. You have the ones that appreciate, that the institutions that have invested in, and technically speaking, those are the ones that they don't mind you investing in, because it technically just helps their agenda and it pushes up when you purchase. But if you have the anomaly, which basically what Dogecoin is, and you have a bunch of people that buy into the coin and you say, hey, we're going to use this as the internet currency. This is what we're going to use to exchange and go back and forth. It's like, no, we want you to use this particular coin, not that one. And then when you have, and then if you're not careful, just based off of issues and stuff with Elon, you can have this potentially try and get drug into like some political stuff, or simply have it attached to any negative catalyst to say, hey, look, this is why I'm not supporting this coin, or you shouldn't support this coin. You should see, you're going to see a lot of these articles and stuff coming out going forward. I warned you even about like the shorts and stuff last year, how they were going to intensify and they're going to capitalize off of any negative news. So now these assets, Tesla, Dogecoin, stuff like that, watch how they try and capitalize off of these negative catalysts. Do your due diligence and make sure that you're looking in between the lines of these price actions, because just because you see a price action on the chart, sometimes it requires several charts to kind of get confirmation on what you're actually seeing, because sometimes what you see is not what's actually going on, because you're seeing a final product and you have to kind of look to conclude to say, hey, okay, how did we get here? If the community is holding, and if we say, okay, look, this many wallets, 65% of all wallets have Dogecoin and stuff like that, it was like, how in the hell do you have this kind of sell-off if the community is holding? And then so this is what you use to kind of say, okay, I need to take a deeper look at this because this is not making sense. And then you can usually find your BS right in there. As always, the biggest thing you can do right now to help the movement of Dogecoin, price action wise, growth as a community, stabilization, everything really, is to remove your coins from the exchanges. I recommend the Ledger, the Nano. I have a link in the description so that you can go directly through the site so that you're not getting any third-party ledgers or any faulty equipment. This is directly through the actual parent company. I hope you found value in this video. Like the video, share the video with a friend. If you would like to support the channel in a free way, you can do that by just becoming a subscriber to the channel. And if you're looking for a way to use your fiat money to actually earn crypto that you can then change out to your own wallet, of course, I have a link for BlockFi in the description section as well. I appreciate all of you. Thank you. And until next time.